Welcome to Trading Nation. I'm Mike Santoli. Check out shares of General Electric surging on Tuesday and adding to big gains since hitting the ominous 666 mark, a level that one of our guests called for on this show last month.
I'm going to put a $6.66 target on the stock. And it's kind of weird. It's a weird coincidence. Back at we all remember that the lows in 2009, the S&P 500 was 666.
Well, we hit it. Is the bottom now in for GE? Matt Maley of Miller Tabak, who correctly guessed that bottom point, joins us now alongside Gina Sanchez of Chantico Global. So, Matt, I guess you can declare victory, but then what goes from here now that we have bounced off that level?
I tell you, that's really, it's something out of the Twilight Zone, isn't it? I mean, we got exactly to 666 again, and the stock bounced. Of course, the upgrade from JP Morgan was a nice catalyst for that bounce. But, we're going to have to see a lot more work. I mean, look at the long-term chart. It is very nice that we were able to hold that 2009 low, and that should provide us limit the downside, at least over the near term. However, we're going to have to see a lot more work and a lot more action in this stock before we can say the worst is behind it for sure. I mean, you look at, the stock fell so far, so fast, that any resistance level, for instance, its 50-day moving average and its trend line from 2018, they're much higher than where the stock is right now, 25, 35% higher. And the thing is, when you want a stock to really confirm that the worst is behind it, you want to see it break a few resistance levels. So what I think what you're going to have to see here is see the stock form a base, kind of trade in a $7 to $8 range, which is only $1, but it's 12%. So it could bounce around in that range maybe for a couple of months. That'll kind of provide the base to give the investors confidence that the worst is behind it. And then if it can break above some of those resistance levels, that will give the people even more confidence that it actually can rally instead of just stop going down. So we still got a ways to go, but at least this was one positive development.
Yeah, I guess on one level, having a lot of room up to any kind of identifiable resistance is a positive, but also it tells you how bad things have been. So, Gina, how do you evaluate this company and this stock right now? There's such a huge range of opinion of exactly what the underlying businesses are worth.
Yeah, and you're absolutely right. The way most analysts are attacking this is really as a sum of the parts. Everybody's just looking at the breakup value at this point, and GE's been trading at option value for some time. That's why it's been bouncing along the bottom. So any catalyst could get it up above where it is. However, we just haven't seen that. We've seen a pretty big Hail Mary in terms of their kind of determination to restructure the firm and to restructure the outlook for where they're going to put their focus. But that's something that takes years to build out, sort of a shift towards automation and electric vehicles. That's not going to happen overnight. So for the time being, it has to survive the negative headlines. And, a liquidity crunch is not the kind of negative headline you want to have. An SEC probe is not the kind of negative headline you're going to have. So we're not out of the woods. I agree with Matt on that, but we are trading at option value.
All right. Yeah, I mean, liquidity crunch, you mentioned, the bonds have traded a little bit better than their worst levels as well. So maybe that's going to give us a clue where the stock ultimately heads. Matt and Gina, thank you very much for joining us today. And thank you for watching Trading Nation. I'm Mike Santoli. We'll see you next time.